Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you're getting some good trades. Today I want to answer a question regarding reading the charts and specifically about a certain chart pattern known as a wedge. A wedge is kind of a triangular type format. Oftentimes it could be symmetrical or it could be a little bit asymmetrical, a little bit off one way or the other, as you see here in the euro-dollar chart. And the question pertains to a breakout of a wedge pattern. And the question specifically is, how do you measure a potential target on a wedge pattern breakout? So today I want to give you some ideas, and I've got three currency pairs we'll take a look at, put them all on a 1 hour chart, and I've drawn out wedge patterns based on previous highs and previous lows. And you can see the wedge patterns, and let me walk you through where the potential targets might be on a wedge pattern breakout. So take a look at the euro dollar. You can see that I went back to 2 days ago to the high, to yesterday's high, and then back here to this low and yesterday's low, and you can see it forms a wedge type pattern. This asymmetrical wedge, its apex a little bit lower than center. If the apex was at the center point right up here, that'd be a symmetrical wedge. Now more times than not, a symmetrical wedge or symmetrical triangle, the break is to the downside. But that's not exactly true with asymmetrical wedges. Asymmetrical wedges, you have to look at is a bullish falling wedge, which is a fake downward move and a push to the upside, and a bearish rising wedge, which is a wedge that kind of pushes up a little bit, gives that fake look like it's going to go long, then turns and falls back to the downside. And in those cases, what you're looking for the market to do is move back to the start of the wedge. In this case, we have an asymmetrical, not necessarily is it a bearish rising or a bullish falling wedge. It's just kind of asymmetrical right here. A couple things to do to determine a potential target on a break. First off, just look back in history. So if I step out just a bit, you can see here that as we break down, it stops at a certain point. If I go back in time, we can see that we had a high and a high right here. Now also I see that there was a little bit of a range right there, but that's one way of doing it, is to look back at a previous support or resistance level based on a high or a low. Now there's another technique that I often do in my active trade room that I want to share with you here, is using the Fib Retracement tool, but using it in reverse. And you need to have 2 additional Fib levels added to your Fib Retracement tool, and that is the 127.2 and 141.4. And these 2 Fib levels are often found in algorithms that are used in trading the market. So let me show you how to use the Fib Retracement tool in reverse, looking for the market to move those levels. In the case of a wedge, what we're looking for is where the break point is of the wedge to the previous high or low point on the other side of the wedge. So in this case, I'll grab my Fib Retracement tool. We have a break occurring right in this area. So I'll move from this area here up to the other side. And you can see here in this case, the market moved right down to 127.2. And let me move this line. This was that line that I had a moment ago on the resistance level. You can see here, moved right to the 141.4 level. And this is just a simple technique that you can use. Again, we can look for previous support or resistance, or we can run our fibs in reverse from the break of the wedge to the other side of the wedge. In this case, I went from the break to the other high point noted in the wedge formation. Let's take a look at the pound dollar. In this case today, we had a break below the wedge. And this one's a little bit more of a symmetrical. It's kind of in the middle here. But again, what we do is we look at previous low points and previous high points. So as it breaks to low, you can see that we have a low point right there. The market kind of came close to it. We have another low point in this area here. Those could be some key levels. The market kind of came down but pushed back up. Be careful at times when you get a break that you think, okay, here it's going to go. Oftentimes a break will be tested and then you get the follow through. So in this case, we kind of push down, push back up, and then we get the follow through. So in this case, the market did move back down and hit at that previous low point of the start of the wedge. But let me show you something here as well. If I take that Fib Retracement tool and I run this in reverse from the breaking point of the wedge in this area. You can see right in that area, that's the breaking point of the wedge. To here, you can see again we went down to 127.2 and down to 141.4. Below that would be the 1618. Now, it didn't occur today on the pound, but let's take a look at the Aussie yen today. And again, what I'm doing is I'm just looking at wedge patterns. So again, I look at the high to the high, low to low, and we kind of have a wedge pattern here. And you can see the market broke out of the wedge today and is pushing it back to the wedge formation. So in this case, I'll take the Fibonacci retracement tool from that break point right about there to the other side of the wedge, and you can see in this case a move down to 127.2, the 141.4, and we just kept moving and moving. Here's 1618, the 200, all the way to the 233 level. Now again, you can look back in history and you can see that the average low in this point is pretty close to like where that low point is, just where the average low point is right there. You can also look back at other levels in the past. Again, going back in time, you can see that we had a range here. So probably what took place is that we had a range low that the market hit today. And as the market was coming down, we kind of have this range low right here. And the market coming down to that, coming back up, another level right there, another low point. Just go back and look at your previous lows if you want to do that. And you can see how the market came right down to that level right there and pushed back up. So again, I want to emphasize though that the technique that I primarily use when I trade in my active trade room is to literally take the Fib Retracement tool, run it in reverse from the break point to the other side, and then I look for it to run to the 127.2 or the 141.4. These have high probability levels. And people often ask me, where do you come up with this 127.2 and the 141.4? Well, the answer to that is simply this. We've been told to look for two levels on a fib extension. We've been told to look for the 1618 and the 200 level. And many retail trading platforms have those two specific levels. But what I found as a trader was the market sometimes wouldn't get there. It was as if it was trying to get there and then it would push back and I wouldn't hit my target. What I found was if you take the square root of 2, that is 1.414. If you take the square root of 1.618, that gives you 1.272. And again, what we're looking at here is percentage levels. So take it back down to the primary numeral factor of 1.618, take the square root, and 2.0, take the square root. That gives you these key levels that the market trades off of quite a bit of the time. So be aware of them, and this is just one of those little techniques to help you determine the potential target on the break of a wedge. Well, folks, this is Dean Malone with Compass FX. I hope some of this information will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.